Welcome to my weekly market roundup, 31st October 2020. If you can hear me and see my screen, please let me know using the live chat panel on YouTube. I will continue. I am Sagar Nandi. I used to work in IT. I have retired now. I am swing trading stocks using the Q systems and techniques. Hi Mike, thank you. This is my email ID tradingprofitably@gmail.com. My traders forum website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. I had a holiday along the road and in a village in Thailand. I came back. I couldn't do the last weekly market roundup and also the previous Wednesday's YouTube live session, but that was in a way good because there were expected market volatilities because of the impending USA presidential election. I didn't take many trades, however, I did track the market and I observed something that I will share in today's session. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I will use the systems that I use in my real life trading. For technical analysis, I use Q Elite running on TradeStation, Q Global, Q Finder running on MetaStop. For fundamental analysis, I use Q Vital, sector industry rotation analysis in real time, Q Edge, and for index level market analysis, Q Index. That was the last slide of my presentation. I'll continue with the live system now. Let's have a look at the global markets first, starting with the Australian index AXJO. Isn't it amazing for how very long time all these global indices are continuing to move inside a range? That is true this week also. As I mentioned, when an instrument is moving inside a range, inside a box in this manner, bound by watermark resistance and watermark support, the dotted pivot levels on Q charts, the optimal entry opportunities are at the upper edge or at the lower edge using proper reversal signal. The reversal signal could be a headwind signal coming at the bottom. In this case, it had the bull release signal as well, or the reversal could be release signal, that is the stretch release signal at the top. If you are taking trades in that manner, then we are using the Q box trade setup. When we are looking at the market index, then we may not have enough activity all the time. For example, there was not enough activity when price reversed from the top at this level. However, when it reversed from the bottom, then we had heavy activity prior to this reversal. Therefore, we could apply the box long technique to take a long position in AXJO in this area. Whereas we could not take box short setup at the top in AXJO itself. However, that is okay because anyway we are not going to trade the index when there is a box like setup at the top or at the bottom. we may look into underlying stocks. If we are seeing a box long setup in the index, we are going to look for fundamentally strong stocks for buying. When we are looking at a box short setup in the index, we are going to look for fundamentally weak stocks for shorting at the upper edge. And if you did that at the right edge, again you had a profitable trade. Prior to that, you had a profitable trade in the long direction. Prior to that, you had another profitable trade in the short direction. The box setup is designed for situations like this, when an instrument is moving inside range, or when the instrument is creating double top or double bottom. A XJO is continuing to move inside a range. The range bound movement was in all the global indices except India. That was for Japanese market also, Topix index, and Topix is still inside a range. Again, it gradually moved down from the upper end of the range to the lower end. Now we are not going to short it at the lower edge. Our preferred shorting point is at the upper edge. It is moving inside a range. China market, CSI 300 index, very much moving inside the range. China has several indices, just like the USA has. Of course, USA market is much bigger. This is CSI 300 index. If you look at the broader index, CSI 800, it is also moving very much sideways. So whether it is the broad China index CSI 800 or the narrower index CSI 300, everything is moving sideways. Same was true for UK's FTSE index, FTSE. It is gradually moving down. In the last session that I had, I mentioned that it had support from the watermark support. Since then, price has broken below the support. So now it is not inside the range anymore. The downtrend is evident from the weekly backdrop chart as well. Because in the daily, price has come down significantly from the recent top, whether from this point or from this point. It has already come down for at least 5 days with bearish flow color. The stretch band indicator is showing it is oversold also. That is not the place where we like to short. If we are bearish on FTSE, right now it is looking bearish, then the optimal shorting opportunity will come if price can go up little bit and then tilts down again in the daily chart, giving a magenta, that is bearish flow candle in the daily, that may give the next go with flow trend following short setup. Looking at FTSE, all the global markets are not range bound anymore. FTSE is in downtrend, and Nifty 50, the Indian index, was in an uptrend overall. We have to say it is still continuing to be in an uptrend. The weekly is supported by this memory trendline support. Daily had a wild move where price went right from the lower boundary to the upper boundary. Since then, price has pulled back, but it has come near the value area, that is the area in between the two boundary lines. If price can go up again, then it may resume the uptrend. Looking at the weekly backdrop color, it may or may not turn into bullish cyan color immediately. Therefore, even if the Nifty 50 daily index daily chart turns up with bullish flow, it will not give a go with flow trend following long setup because the weekly color will not meet the required condition. But that is okay. Again, we are not always looking for the index or index futures for trading. If the index can go up from here, I'm sure there will be plenty of strong fundamental stocks giving appropriate buy setup. Nifty 50 is continuing in an uptrend. There is memory support, there is memory resistance also, but it didn't make real lower low yet. It is still going up. However, because now I notice there is a memory resistance and memory support both, if we look at this period, we have to say that it is now in a range. If we look at the longer period, it is in an uptrend. If we look at the recent period, it has now become range bound. So from uptrend, at least for the recent period, it has turned into a range bound move. Also, there are two bearish headwind signals in the weekly chart in last 3 weeks. That is also a cause for concern, but I am not going to look for shorting opportunities because of the trend line support in weekly as well as the trend line support in daily. That is not a time where I like to take shorts when trend line supports are nearby. Global markets are continuing to be overall, you may say, range bound, not bearish, not bullish overall. The USA market was in a strong uptrend. Before looking at the USA market through its maybe ETFs or indices or futures, let's look at gold and oil, GLD, the gold ETF. It is continuing to move inside a range, gradually coming down, but it doesn't show heavy selling, then the drop would not be so gradual. It has a watermark support nearby. It has trendline resistance but no trendline support, only watermark support. If this support is broken, then we may say more confidently that selling is coming in, heavy selling. Right now it is coming down but gradually coming down. The weekly is bearish color, so there is no buying opportunity right now. If price could break out of this multiple trend line resistance, then I could look for a breakout long opportunity, especially if that breakout is accompanied by heavy pressure or very high volume. Right now there is no trade setup in gold, not looking bullish, not looking very bearish as well. USO, the oil ETF, it was moving inside a narrow range, and I am rescaling the picture. It is still moving inside a range. If you look at the weekly, if you look at the daily, it is similar to gold. It is gradually coming down, not going up. It has memory trendline resistance, no trendline support. There was watermark support which was broken on Thursday. So it is also coming down but gradually coming down. On Friday it has a doji candle, an inside candle. There is a chance that price may reverse from here. It is below the lower boundary level. Price is oversold, shown by the stretch band indicator for 3 days, and it had high volume 2 down days, and after that on Friday it has less volume in decisive candle. If price goes up from here, there is a possibility it will go up at least until the value area. However, there may not be any Q trade setup even if it goes from below the lower boundary to the value area. Instead of looking for a buy setup in oil, you might look for a buy setup in energy stocks, oil industry stocks. We looked at the global markets, looked at the two commodities. There is no clear trade setup, Q trade setup in any of them. Now let's look at the USA market. This is the broad market view for the USA market using the Nasdaq Composite Index and NYSE Composite Index along with three internals: new high low, advanced decline, up down volume. This market breadth chart, weekly interval, doesn't give trade signal. However, it helps us decide if something abnormal is going on. Let's try to see if we get some insight from here. If we look at new high low, until previous week it was pretty bullish. It never turned below zero. This week it dipped below zero, but NYSE barely so. Nasdaq dipped below zero by a bigger size. That means most of the stocks are still close to new high than close to new low or making new low. Not making new low as much as making new high. At least until last week. This week it dipped little bit. If we look at advanced decline, it is not giving us any signal. It is patchy, up, down, and that is normal. This week it had a down move, but nothing abnormal in NYSE. In NYSE, the advanced decline is bearish, but that is at a normal level, nothing exceptional. In NYSE, you may say the advanced decline came down much more. That has not happened for many weeks. The last time it came down so much was here. What happened after that? Price didn't really come down. Doesn't mean this time also it will do the same thing. It just means that in previous several instances when the Nasdaq advanced decline made as deep low as this week, here and here, price didn't go down. Same was true for this case. Only time when we say a sustained down move in Nasdaq was in this area that was accompanied by a bearish headwind signal. Around the same time, NYSE Composite Index also had series of bearish headwinds. In recent periods, Nasdaq doesn't have any bearish headwind. There is a bear release signal, but that is different from bearish headwind. NYSE had a bearish headwind several weeks ago, several months ago in fact. Since then, price has not been able to go up above the watermark resistance created by the bearish headwind. I have mentioned several times that when a bearish headwind can pull or rather push price down and then price retests the high created by the bearish headwind, it is likely that some selling would be left and price may come down again. That seems to have happened for NYSE Composite Index. Notice that NYSE Composite didn't make a new high at this point. That is around beginning of October. It didn't make any new high. It is actually far from the all-time high for the composite index, whereas Nasdaq composite came very close to the previous all-time high, very close. So Nasdaq was clearly stronger, and for last 2 weeks it dropped, but that has not changed the uptrend for Nasdaq. For NYSE also it has not changed the uptrend. Both Nasdaq and NYSE are still supported by trendline support. It is possible that price will bounce up from here. That is the picture we can see from the composite indices. What about up-down volume? Nasdaq was very bullish for a long period of time. This week it has a deep bearish bar. Similar bearish bar came in Nasdaq many months ago. And from there price fell. What about NYSE? NYSE up-down volume doesn't give any signal. The cyan and magenta bars are very normal. So we don't have overly bearish picture from the market breadth information. Again, the weekly market breadth chart that I am sharing here, it does not give trade signal. It helps us see if there is abnormal movement going on under the hood, especially under the hood by looking at the three internal plots, and also the composite indices are in a way a view of the market internals because they are not the narrower market ETFs or market indices. Now let us look at the futures first, and maybe we'll spend some time on futures and then also on the ETFs to see if anything we can see that is going to help us decide what to do, and I think we'll find that. This is the E-mini S&P 500 futures. For a long time the USA market was strongly bullish. Now we can see for the S&P 500 E-mini, it made a lower high in the weekly chart and then came down, but it is still supported by trendline support. There was a bearish headwind earlier from which price fell sharply. Price recovered very strongly, broke above the watermark resistance that was created by the bearish headwind reversal signal, came down, that is, it created a false upside breakout here. Try to test that resistance again. Could go above the watermark resistance and failed again. Again, the place where a bearish headwind could result in price drop, that is a place from where several times price may try to come down. That seems to have happened. However, there is trendline support not only in the weekly but also in the daily. In the daily chart, the traffic light candle color is red for 1, 2, 3, 4, 5 days. That's for the whole of the week. It is already oversold for those 5 days. So there is no short setup here, and now S&P 500 futures is inside a range. What was true for the global markets and is still true for the global markets for many weeks, many months now. Now that is coming true for USA market. Now S&P 500 E-mini futures is inside the range, very clear range formed by resistance memory trend line and support memory trend line, and when it is inside a range I would prefer to buy at the lower edge, not short. So I am looking for a bounce, probably better if it tries to go below the trend line support and goes up from there, creating a false downside breakout. That will give lucrative low risk buying opportunity. And I can see there was a bullish headwind here from which price went up. So some buying may still be left at this point. However, we'll wait for the actual reversal signal to appear, which may be either a bull release signal or a bullish headwind signal. There is no short setup in the E-mini S&P 500. What about NQ, the Nasdaq? It felt like the market dropped a lot, especially technology stocks, Nasdaq, isn't it? We'll see something interesting probably. Yes, price did drop. Again, like S&P 500 E-mini, it created lower high. Price came down, but it is still having an uptrend in the weekly chart. Weekly has a memory trendline support. We have to see if that gets broken decisively. In the daily now, again like S&P 500 E-mini, it is inside the range. At the lower end of the range, the traffic light color is bearish for many days. The optimal shorting opportunity has gone. That would have come at the upper edge when the bear release signal came, not now. Now again I am going to look for a buying opportunity instead of shorting opportunity. Not that price cannot go down, but if it goes down, I am not going to have a low risk shorting opportunity. Instead, if it goes up, it will be much easier to find a low risk buying opportunity. So I will wait for that. Dow Jones Futures YM. Here the weekly has a memory trendline resistance. The daily has memory trendline resistance also. S&P 500 and Nasdaq 100 futures did not have the weekly trendline resistance. It had lower high but not the trendline resistance. Here the trendline resistance is coming from far in the past where a bearish headwind came and price fell down from there. It has broken below the weekly trendline support more decisively than in S&P 500 and Nasdaq. However, it has a long lower tail, so we don't know where price will move from here. The daily has trendline resistance, no trendline support. However, it has watermark support. Again, the traffic light color is red for so many days that there is no low risk shorting opportunity right now. I'll be happier if it goes up from here because it will be easier to find low risk buying opportunity. No trade setup now. Inside a range, you may say. And Russell 2000 futures RTY. The weekly came down, but it is stronger in a way than the other futures because it came down after creating a higher high, not a lower high. It has a trendline resistance, but that is some distance above this high. In terms of recent highs, it made a higher high and came down, didn't even break below the trendline support. Such retesting of trendline support is very normal. In the daily, at the right edge, it has trendline resistance and support both. For longer period, it has trendline support and trendline resistance both. It is moving erratically. Made lower high, lower low, dropped, made a wild move up to the upper boundary and then made a wild move down close to the boundary. However, because there is trendline support, I am not going to consider shorting. And again, the traffic light color is red for many days. That will not give me optimal shorting point. Though it felt like market is weak, none of the futures are giving a short setup. What about the ETFs? For that, I switch from Q Global running on Metastock to Q Elite running on TradeStation. Let me drink a sip of water. 1 minute. Let's go through the futures quickly. S&P 500, not futures, ETFs. S&P 500 ETF SPY is inside a very wide range. At the lower end of the range, I would be happier to see a bounce from the trendline support. In the weekly, after a bearish headwind, price came down but didn't change the overall uptrend. Similar to the futures. Nasdaq ETF QQQ. Again, after bearish headwind, price fell for one more week, broke below the trendline support. In this area, it is starting to move sideways. That is clear from the daily chart also. Price's trendline resistance and support closer to the support, so I'll be happier if it bounces from here. Earlier, there was a series of two actually bullish headwinds from which price could go up. Some selling may be left around this price level, not selling, some buying may be left from this price level, so that is more reason to look for a bounce from the trendline support. Dia, if you remember my earlier webinars, you would know that when price was somewhere here, looking at the trendline resistances, I mentioned that I was not going to consider buying Dia because of the series of trendline resistances. That was very useful decision because from there price drop. Now here the weekly was moving inside the range. Daily is a very wide range. Again at the lower end of the range there was heavy activity volume in recent days. That may be a sign of exhaustion of bears. That will be confirmed if price can go up with a bull release signal. Friday's candle is a doji candle that may lead to a bounce up, and if price goes down it will be too late to short. The shorting opportunities, the sideways instrument is at the upper edge, not at the lower edge. IWM, similar to the futures, Russell futures, it made a higher high, then came down after a doji candle, two indecisive candles you may say, but didn't even close below the trendline support. Right at the trendline support in weekly as well as in daily. That is a sweet spot from where price may bounce. So what we saw from all the four market futures and market ETFs is that it is not so bearish, but price came down, but that coming down was probably overdue. All the global markets were moving sideways for weeks and months, and USA market was going up and up. It was time for it to pull back somewhat. If the market was bearish, then we would find some bearish setup in at least one or two or three of the market futures or ETFs. That is not the case. I'm finding it difficult to identify low risk shorting opportunities. That is true not only at the market level but at stock level also. For example, if we look at the leading mega cap stocks, if we look at their weekly price change, most of them dropped by very large percentage. In recent periods, it has not dropped by such percentages in a week, like 5 to 7.7%. However, if you look at the mega cap stocks, same stocks over daily interval, that is Friday's move, Friday also they moved between 5 to 6%. So the weekly move of 5 to 7% was mostly from Friday's down move. Until Thursday, they were not so bearish. Whereas if you looked at the market ETFs, market futures, they were actually down earlier in the week, not so much on Friday. Here I am looking at IWM. If I change it to DIA, for example, Friday price change was not so much. The same is true for the other market ETFs futures. If we look at QQQ, QQQ is heavily weighted by the mega cap stocks, so that made a big drop on Friday. However, not as much as the mega caps down moves on Friday. So what seems to have happened that earlier in the week, not so large cap stocks were pulling back, and on Friday the mega cap stocks pulled back. But that pullback might have been normal. If we look at the mega cap stocks one by one and try to see if there is a shorting opportunity, this is Google. Clearly there is no shorting opportunity because both daily and weekly flow and backdrop colors respectively both are bullish. We have no short setup. Netflix came down here, that was due to earnings. Since then it is moving sideways. On Friday it broke below the trend line support, but we have to see whether it continues in a downtrend or not. The weekly is bearish in color and shape. However, there is a heavy congestion area at this price level, very high congestion area. For many months, this price level held. It is possible that price will break below that, but not so probable. It will take heavy effort for price to come down. It can happen, but it will take heavy effort because of the congestion prior to that. No clear short setup now. If we look at the daily, then we can also say it is inside a range and at the lower end of the range. That is not a place to short an instrument, at least not a low risk way to short the instrument. Amazon, it pulled back from the top. It is inside a range now. All those are true. However, it has trendline support. So I am not finding any shorting opportunity here also. Though the weekly broke below trendline support, it is not still in a downtrend. It is inside a range bound by resistance and support memories. Because support memory is here, I am not going to short Amazon now. Apple, lower high, you may say higher low. Price already pulled back for several days from the recent peak. That is not a place to short. There is a watermark support level here. Not a place to short. Already down from the recent peak for many days. Microsoft again has a trend line support nearby. Now it is inside a range. there was a bullish headwind from which price went up. Price is retesting that level. It is likely price may bounce from there. No short setup here because it is at the lower end of a sideways range. Facebook closed right above trendline support both in weekly and daily. No short setup. And the last one, Tesla. Again, it is moving inside a range, already down for several days from the recent peak. It is inside a range and lower end of the range. So we are not able to take a low risk short trend. None of the mega cap stocks are giving a short setup. None of the market ETFs, market futures are giving a short setup. It is difficult to say market is bearish. If you looked at all these mega cap stocks, you would have noticed that they have started to move sideways, almost all of them, somewhat like almost all of the market futures. So what was true for the global markets for so many weeks and months, that is now becoming true for the USA market. It is moving sideways. Of course, next week there is a major event in the USA market, that is the Tuesday's election, that may cause price to break out of the range. Will it break out to the upside or downside? That we don't know. We may wait for that before taking many new positions. My current positions are still bullish, though I have reduced many of my positions. What position do I have? Let me share some that I shared already in the market forum. I don't have the habit of not sharing before and then telling, oh, that is where I made a huge profit. Not my way. On my traders forum, sakarnandi.com, I shared about the regional bank ETF, KRE. I shared it 25 days ago. That was on 6th October. 25 days ago, right? Not now. Let's look at it. As usual, I shared the snapshots. On that day, using real-time Q edge, I saw the market was very bullish. Remember, that was as of 1 p.m. All my times are set to Eastern Standard Time, New York time. So as of 1 p.m., the market was very bullish, and financials was in fact the strongest sector. And for the prior periods also, it was bullish. My trading decision was based on that day's real-time analysis, keeping in mind the previous period's history as well. Financials was the strongest. Then I looked at regional banks. It was weak for a long time and then starting to strengthen from 10-day period up to that day in real time. So that was a reason for me to look to buy some regional banks. And I looked at KRE. I shared in previous market roundups that I looked at several regional bank stocks also, but didn't find a suitable buying opportunity. KRE was giving a very clear breakout. As you know, I am not a fan of breakout trades, but it was giving a breakout setup. Why am I not a fan of breakout trades? Because often they don't give me a low risk entry point. For example, this breakout happened after 3 days of bullish moves on the third day of bullish move. Prior to that, there was a doji candle. So the proper entry could have been right on this day when we had an engulfing bullish candle, very bullish shape, bullish color, right after a doji candle at a lower price point. However, we would be reluctant to buy maybe we could take a small position, but we wouldn't take a full position looking at the trend line resistance that was right above it. Next day price closed just below the trend line resistance, and on the day I shared it, it broke out. As of 1 p.m. it was looking bullish, so I shared it. Now later on price had pulled back. I shared in a follow-up post that by the market close price actually pulled back and closed below the trend line resistance, so the breakout was not confirmed. So if you are taking breakout trade or any of the Q trades or any trade in general using daily chart like I do for swing trading, then you may wait for the confirmation near market close. In Q technique we don't have to wait for next day, we may take the trade just before market close, or if you are not using real-time data, which is probably not true for Q traders, all the Q traders have full real-time data, you are able to trade just before market close or next day near market open. So in this case, if you followed that Q technique near market close, you didn't have any trade setup. Now I use, like many other Q traders, real-time fine-tune chart to sometimes take an entry near the market open, maybe right when the breakout was happening. So in this case, I actually took a trade in carry when the breakout was happening. Another reason, sometimes I don't wait till the market close because I'm in the opposite time zone. Sometimes I stay awake till the market close, but sometimes I prefer to take the trade earlier. Now I took a position in carry. I used synthetic options. I bought the call, short the put, 40 strike. So you may see at that point of breakout, it was around 39. I bought the call, short the put, slightly out of the money. And because this was October 6 and the election, US election is November 1st week, I chose longer expiry. So I opened the trade in multiple accounts. In one account, I took December expiry, another account, I took January expiry. Bought 40 call, sold 40 put. Now, when I saw that price was not clearly breaking out, what I did, I sold 45 call out of the money. So my synthetic position was anchored at 40 strike, and when the breakout was not confirmed, looking at that, I sold out of the money call 45 strike. What was my expectation? That if price came down little bit or it was moving sideways, then my 45 short call would give me profit, and right when price started to go up again, I could book the profit and let my synthetic leg play out. That was my thought. That is exactly how I initially opened it, just as a synthetic long position, but looking at price not able to decisively break out, I sold some further out of the money call. That was on October 6th. And let me explain exactly how I took that trade. It may be of interest to some of you. Usually I don't go into option trades so much in detail. As you know, I keep on telling, unless we are able to make consistent profit in stocks, going into futures or options is risky, because with that higher leverage, only the loss will increase, maybe by 10 times, tenfold. So it is better to make consistent profit using stocks first before going into options. Having said that, let's look at carry, exactly how I traded it. I'm using Q Elite on Trace Station. My initial entry was on this day. It was a breakout at that point, but the breakout didn't confirm. I opened it using 40 synthetic position and then I sold some 45 call because the breakout didn't confirm. Then price went up but pulled back. After that, I saw an engulfing bullish candle that went up right from the yellow direction line, and that was not a bullish day for the market, or at least from the relative performance line you can see KRE was sharply outperforming the market. So what I did, I closed my out of the money 45 call. So I put some money in the bank. My 40 strike synthetic position was still open. Equal number of longs and long calls, equal number of short puts. What happened after that? Price went up, and that was exactly what I was anticipating. My reason of buying the synthetic and shorting out of the money call was that if price pulled back, I would make profit in the out of the money call, and if price tried to go up, I'll book that profit and let the synthetic one play out. So good for me. That happened. When price went to the top, it made a doji candle. Next day, price came down little bit. It was displaying a bearish headwind, possible reversal signal. What I did, I made my trade fully risk-free on this day. I bought back all the 40 puts. I had a synthetic position left, short put and long call. I bought back all the short puts and part of the long calls also I closed. Thereby I got back significantly more money than I invested in the whole trade, because I already booked some profit from the out of the money 45 call, and now I booked profit on the put size of the synthetic stock position and also from the call side of the synthetics stock position. All the three legs made profit. I had more money come back to me than I invested initially, and then I let the position play out. It came down little bit, so I exited the synthetic position at a perfect time. I still held part of the call legs, and see what happened. On Thursday it went up again. Friday the up move continued. So my remaining call legs are also in profit. So all my money is already back to my account plus some extra profit. So I am now riding with house money, and that is also in a profit. So what I did, looking at the Thursdays, again another engulfing candle, another time when it was going up from yellow direction line, another time when it was sharply outperforming the market. Like a sense of deja vu. Exactly what happened at this point. Engulfing candle, bullish shape, bouncing from yellow direction line, relative performance strongly bullish. I added to my KRE long position, and this time I bought some stocks. In fact, I bought. So last few days, if I had taken any trades, they were probably on the long side than short side. On short side, I took some day trades, but not holding any short position. KRE, I am holding a long position. On the call options, I am holding it free using house money, and I actually added to my KRE position using the ETF over the last 2 days. If you look at Friday's price, it is actually giving a go with flow trend following long trade setup. When did I first talk about KRE? Right on this day. Since then I have made good profit, and it seems to be going up, though the market is weak. The relative performance is strongly up. Now, how about its industry strength? Let's look that up from QH. But before looking at the regional banks ETF, Okay, let's look at the regional bank ETF first. I go to the sectors. Let me drill down from the financials to the industries. I'm using QH now. Sort by 1 day performance. Regional banks comes to the very top. Remember when I first shared regional bank on my 6th October post, look at the regional bank's scorecard. From 10 days period onward, it was bullish. Prior to that, it was bearish. So 10 days onward, remember that, and look at QH today. It's not 10 days. It is somewhere between 2 months to Friday. It is bullish now. Somewhere between 2 months to 3 months to Friday. So I could catch the entry point in carry probably well ahead of many others, if not most other people. Of course, I cannot do better than other Q traders because they have the exact same tools, but this visual tool helped me enter KRE. Why did I enter KRE? Because I didn't find a good setup in any of the individual banks. As you also know, I prefer to trade individual stocks because then I can choose the strongest fundamental stock. But in this case, I didn't find any good trade setup. So instead of buying individual stock, I bought the ETF. I also noticed that KRE pays a dividend, which is not too bad. I may find that out from, let's put it here in icon. Icon has a dividend of 4, not icon, carry has a dividend of 4.24%. So that was also a reason that I kept in my mind that in case the ETF came down, which it didn't, I could still continue to get the dividend. And I didn't have a single stock risk. Now it is interesting that regional bank is doing pretty well because regional banks are often, not always, I'm not an expert in analyzing macroeconomic data, but regional banks, financials, especially regional banks tend to do well when the economy does well, and this seems to be turning around. So that is a position I traded and holding, and I think I executed it pretty well. As you can see, options are very useful if you know what you are doing, and as I keep on saying, they allow me to manage the trades better, because in this case I could book profit in out of the money call leg first, and then I could break the synthetic, and then finally I added more to the stock position. If I simply use stocks, then I would not have so much flexibility, and I always appreciate Dr. Jeffrey. I knew about synthetic stock positions. It is not difficult to understand, but I didn't trade them enough until I listened to Dr. Jeffrey's video over and over and over again, and how he is using it. I really don't know exactly how he is using it. He has many years of experience. He has fine-tuned it to perfection. I'm still learning, but I think I did pretty well with the option strategy in carry. Along the way, I did find a stock that I wanted to buy in regional banks, but before that, let me spend some time on the market sectors. We didn't cover that yet. This is a comparison chart that I share every week to week sector comparison. The left chart is from previous week. Previous week, it was mostly bullish. 9 of the sectors were up, only 2 were down. Prior to that, it was mixed. So from mixed picture, it turned bullish. That was 1 week ago. And in the current week, from bullish, it turned very bearish. How much more bearish can it get? very large percentage down move in all the sectors. Again, though it is showing very high level of bearishness in individual market ETFs, market futures or mega cap stocks, there is no short setup. So I am not able to look for shorting opportunities now. Not that it didn't come down, it clearly came down and it had a big reversal also at the sector level. But it is already down so much, I am not able to look for shorting opportunities. And if we look at a advanced decline from 1 month period to 1 day period for the sectors, industries and stocks, green is bullish, red is bearish. We can see over 1 month it is still bullish. After that it weakened, became bearish over 10 day, 5 day. Over last 2 days, Thursday, Friday and 1 day, it is bearish, but actually it is better than in the middle. So it is bullish at the longer term period, turned bearish in the middle, improved somewhat over last 2 days. Of course, Friday is weaker than Thursday, but not all the sectors were down, right? So it was not so bearish as it felt. In fact, near the close of the day, the futures recovered somewhat. However, I shared a tweet, and that was not near market close. Let's look at the tweet. And today's session may go somewhat beyond 1 hour, but that may be worth it because of the apparent weakness in the market, you may say. And what the data is showing, it is weak, of course, but not bearish. I'm looking at the tweets here. This is what I shared, and I shared it at 10 a.m. Eastern Standard Time. That was October 30th, so Friday. Energy, excuse me, energy is starting to reverse. That is what I saw at 10 a.m. Eastern Standard Time. Remember the regional banks case where this heat map scorecard helped me identify the exact turning point. Energy seems to be doing that. It is starting to turn around with acceleration. However, when I looked at individual energy stocks, I could not buy any, could not find any suitable trade setup. So I'm keeping an eye on energy stocks, but didn't find any buying opportunity. Now, is there another snapshot? Yes, yes. At the same time, in that tweet, I shared the Q Edge advanced decline snapshot, and I talked about energy in the tweet, that it was up on Friday, the real time, and also the 1 day period, that would be Thursday. So both on Thursday and Friday, energy was up. That is what I mentioned in the tweet. However, if you looked at the bar chart, all the other sectors, you would see that financials was also up both on Thursday and Friday as of Friday's 10 a.m. Eastern Standard Time. What happened at market close? Let's look at it now. Now I'm not going to look at the tweet, but I'm going to look at the Friday's market close data from Q Edge. Financials actually ended up. Thursday we already saw it was up, and Friday also financials was up, energy was up, energy was the best performer. That is why I didn't only hold on to regional banks ETF, I also added some. This is showing now 1 day performance, which is Friday. If we look at 1 day versus 2 days, we can see over 1 day only two sectors were up, energy and financial. So financials was up over 1 day as well as 2 day. And if we look at longer term, even longer term period, and all these are from QA financials. Over 1 month, it is the very best performer by far. In the middle, it weekend. So what do we see? Over 1 month, financials is the best performer. Then it dipped a bit, and then on Thursday and Friday, both it went up again. So I could open the initial long position in carry right when this strength started to come up, and in last 2 days I added to it. In the meanwhile, I booked my profit and got my money back. That is what Q Edge allows me to do. Q Edge and the other Q tools including Q charts. Initially, when I opened the carry position, regional banks ETF, here I didn't find any stock to buy, but afterwards I found, and that is this stock SBSI. Okay, I should add sbsi.o. I am now doing a fundamental and peer analysis of SBSI South Side Bank Shares Incorporation regional banks. It has found 61 peer stocks. Now it is retrieving data about that 61 stocks from Reuters or Refinitiv and calculating the scorecard. What we can see from this snapshot that its valuation is in the middle. It has earnings growth in the last quarter, so we are allowed to buy it. It has it has earnings growth in the last 3 years as well. So in terms of fundamentals, I am looking for either undervalued stock or high earnings growth stock, and it is a growth stock, so I am allowed to buy it. This also pays a dividend of 4.6%, so that's another reason to consider buying the stock. And the EPS is positive, earnings per share yearly period, showing the company makes money. And see the strength of the industry. Earlier from Q Edge, I showed that regional banks was one of the strongest. In fact, regional banks was the strongest financials industry on Friday, relatively speaking, and in itself, in absolute terms, 87% of the 61 peer stocks went up. So regional banks was very strong. SBSI is fundamentally strong. So I looked at SBSI. Let's look at it using Q Global. We could use Q Elite also. I think I timed it perfectly once again. You can be the judge. In the weekly, it had support from these watermark support levels, these dotted pivot support levels. Multiple times it tried to test this area but couldn't break below that. It had a trend line support just below the lowest tip of this candle. Couldn't touch it. I would be happier if it could touch it and make a false downside breakout, but that didn't happen. Anyway, I was looking at SPSI at this point. When exactly? On Wednesday, Thursday, Friday. Remember, I already had a long position in carry. I therefore was tracking regional banks. There was no relative weakness in regional banks. I could easily get all my money back. And then I saw on Wednesday, this fundamentally strong stock came down sharply and stopped right at the memory support. So I was watching it, and on Thursday, it very nicely bounced up. So I made an entry on Thursday. What kind of Q setup was I having in mind? That was a bounce kind of setup. That is bounce designed for when price comes down sharply, hits an existing trendline support and starts to reverse. So I took an initial position in SPSI on Thursday, and on Friday it gave another Q trade setup that was a go with flow trend following long trade setup, and I added to my position in a separate account. So I have account now in KRE and at least in one more regional bank. When I first opened the carry trade, I couldn't find any suitable setup in individual bank stock, but later on I found it and I have a long position in SPSI. Now this technique is very precise. I think I did pretty well. When a stock comes to trendline support and goes up from there, that is very low risk, extremely low risk point. And because I am looking at strong industry, strong fundamental stocks, those tend to be pretty profitable and really high probability trades. And the same technique I used in another stock that I mentioned in the forum. Let's look at my forum post on Friday. I posted only one topic in forum on Friday. That was on STX. And Friday market was very much down. STX's industry, technology hardware storage, that was also down. Not only in itself, relatively speaking, also STX industry was weak because the relative score is magenta. However, there was some strengthening you could see from base column. Not a lot though. So industry, I have to say it was weak, and I mentioned that in the forum post. However, look at the fundamentals. Excellent valuation. The industry was weak, of course. And see the dividend, 5.6% dividend. Earnings is already out. Next earnings is 2nd Feb. So earnings is out. Great valuation, great secondary valuation. Very nice earnings quality. There is no high short interest. So in terms of valuation, it is allowing me to buy. And though Friday was a very much down day, this stock was barely down when I shared it. When did I share it? 3:45 p.m. Eastern Standard Time. So about 15 minutes before market close. And that time it was barely down, break even, unchanged you may say. Then I looked at the charts and I noticed here, like the SBSI regional banks, it had a trendline support. It fell sharply, suddenly hit the memory support accompanied by heavy activity and stopped there. And in addition, it had weekly memory support. When I shared it, I saw that the traffic light was still red. So I probably had mentioned it that it will be better if the daily candle was more bullish. And this is what I shared at, what was the time? 3:45. So 15 minutes before market close. Yeah, 15 minutes before market close. How did STX end? Let's look at STX. In fact, it ended with a bullish shape candle and the traffic light color is not red anymore. It is neutral. So it is giving a bounce setup. Considering the fact that Friday was very weak, this stock actually closed higher and it reversed rise from the trendline support. So I took a position in STX. What are the highest probability strategies to use? I cannot say highest because I don't know probably all the strategies people may use, but one of the high probability strategies in such a case is to short put vertical. So I shorted around the trend line support and bought further out of money. Short closer to the money, and to protect my position, to make it limited risk, defined risk, I bought further out of the money. Short put vertical. Short put verticals taken in a bounce setup scenario has extremely high probability of success. You may try it out yourself, especially when you are taking that looking at the stock's fundamental strength. I would prefer industry strength, but that was not to be true on Friday. The market was down very much. But remember, I looked at the market futures, market ETFs. All were near the lower edge of the range. All of them were near support. So it is more likely, not guaranteed, but more likely that they will pause at the lower end of their respective ranges or will go up somewhat. And if that happens, this stock is much more likely to go up. That's why the short put vertical in this case is the appropriate strategy. So I took a long position in STX. I mentioned in the post, of course, Tuesday there is an election. That's a very big event. All the analysis that I'm explaining now may go haywire based on what the market does after election, but still I took some position in regional bank ETF, regional, at least one regional bank, and also in STX. All are long positions. I'm not holding any short position. That probably tells my market outlook. Market fell. That is what we saw, but all the market ETFs, market futures are near support. There is no short setup in the market futures, market ETFs, or the mega cap stocks. So I am not able to say I'm bearish. What is my preferred trading direction? That is very clear. My preferred trading direction is actually long because it is near support and I will find lucrative buying opportunities much more easily. So my preferred trading direction is to the upside. Of course, I will take the trades that comes to me, but why I'm saying my preferred direction is long is even if the market goes down next week, I will not find low risk shorting opportunities easily. I would prefer the market to go up because that will make it very easy to find low risk buying opportunity. That's it. My preferred trading direction is bullish, market outlook is neutral. We didn't look at the finder pictures. Let me do that very quickly. This is finder Friday. That is bearish, overall bearish. Though the reversals are there, and that is expected because the market ETFs, mega cap stocks, several stocks are at the lower end of their range or near support. So reversals were likely. That is more balanced when looking at reversals. Overall, it is bearish, but not hugely so on Friday. 68%. Hugely so will be 80% or more. The weekly period is, of course, very bearish. So that is in line with what we saw in the market ETFs, market futures, mega cap stocks. Market is down for 1 week. Sectors are very much down, but near support. That's why I'm not able to say that I'm looking for bearish trades. Let's end today's session here. Thank you for joining me. I look forward to seeing you in our next session. I am back home, so I hope to have our next webinar on Wednesday. That's after election day, isn't it? And also Wednesday there is a Fed rate decision, I think. Let's try to meet on Wednesday. I'll announce the exact link through Twitter. Thanks once again for joining. Have a great weekend. Keep safe and trade profitably. Thank you.